There has been a concerning trend in 2022 that is disrupting markets. That trend is the trend of rising inflation. What's so interesting about this trend is the fact that we aren't seeing the type of across the board response as we once had. In 2022, the Fed has chosen to respond to inflation with force, committing to a higher for longer policy track. Other major central banks, however, have been less keen to do so, even at the expense of rising inflation. So, when one might normally expect higher inflation to lead to a stronger currency on the expectation of central banks raising rates, this isn't the case in 2022. Well, at least not across the board. Yes, higher inflation has resulted in a stronger US dollar because the Fed has committed itself to higher rates, but other central banks just aren't having it. On Wednesday, inflation readings out of the UK were a good deal above forecast, and yet the pound was sold, reflecting this new strange trend where there is just so much worry about the health of the economy that allowing inflation to run up is seen as the lesser risk. That's just how scary things are at the moment. We even saw the Canadian dollar sell off on Wednesday, despite higher inflation data out of Canada. What it all comes down to is this major disconnect between the US economy and the rest of the world, a disconnect that is proving to be truly disruptive. As a side note, keep an eye on dollar yen today, which is threatening a move through 150, and which could also then be at risk for more aggressive intervention response to offset this rapid decline in the yen. Key standouts on today's calendar come from German producer prices, the Eurozone current account, U.S. initial jobless claims, the Philly Fed, existing home sales, and some Fed speak. That's all for now.